Steve and Dave. Hey, good morning, good looking people. Guten Morgen. Let's go. So let me remind you that trading's risky, not appropriate for everyone. Your past performance, good or bad, is not necessarily indicative of future results, although it might be. Please stay small, stay humble, focus on the long term, and never risk money you cannot afford to lose. Hi, my name is Wayne. I'm a currency trader just like you. And we're trying to get through this thing called Forex alive. You want to be a cork in the river of Forex. So anyways, let's float together, huh? So what are we going to do? We're going to cover technical analysis, fundamental analysis, trader psychology, all with the overriding goal of helping you learn how to put together trade plans. Not for today, really, but for tomorrow, next week, next month, that kind of thing. So planning for the future. Yeah, neat stuff. Cool beans. Good to be here. I'm sorry I'm dressed so casually. I was outside walking in the morning, listening to the loons. Let's see if I can do it. So anyways, so that's what's up. So thank you for being here. Thank you for being a part of this Forex.Today community of almost 17,000 foreign exchange traders. That's pretty cool. I think that's I think it's a very good thing. I think we help each other a lot. I think we have a good vibe. I think we pull each other up. We elevate each other. So I think it's a very good thing. If you need a broker, how about tradersway.com? They're a foreign exchange broker, which means when you pull the trigger, they execute your trades into the interbanking system for you. Now you think, well, yeah, that makes total sense. But you know what? That's fairly unusual. In fact, during the Swiss National Bank debacle a few years ago, some of the big names that you've heard of that had tens of thousands of clients, guess what? They went out of business overnight because apparently they were not entering your trades into the interbanking system. And instead, they got caught holding the bag. So, yeah. So isn't it, you'd say, well, sure, Wayne, all brokers enter your trades into the interbanking system. That may not be true. So anyways, we do know that Traders Way does do that just from that one specific incident. So anyways, that's cool, right? But you need a broker that not only executes it, but executes it quickly. You want your spreads to be narrow, so they have to have good liquidity partners, and you want the swaps to be as big as possible. Let's say, does the chart template work on MT5? Only if you install the MT5 chart template package with the auto installer. Is that a good answer? Yeah! Yeah, you know the button that says MT5 auto installer? You click that button. That would be the one. Yep. Cool, so good to see you, everybody. Welcome, welcome, welcome one, welcome all. Let's get going. I got to find the button to switch views here. Ugh. You know what I need is one of those automatic buttons to make macro everything. How about that? Oh my God, there's me. Which hair is worse, the one I have now or the one I have there? I did shave, though. I did shave. So I brought this up today because we're hump day, right? And as Forrest Gump says, it's good to know where you're going, where you been. Yeah, good answer. Right? Mm-mm-mm. Mm-mm-mm. All right. So what's going on in the world today? Takes everything you got. Something to take away all your worries sure would help a lot. Trade balance. People are not buying stuff from China, huh? Wow. Yeah. Huh. 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 It's not even close. Very good morning to you, CJ. Yeah. Not exporting, not nearly enough, anyways. So got to keep our eyes on that. That ain't good. Okay, that kind of thing would strengthen the yen. Let's see what else we got. Germany, no inflation. Unemployment rate. We're looking at here, average earnings. Average earnings, well, yeah, that's actually good. Income levels going up in the UK. That's good. Not so they're saying the 3-month average over the year. Okay. Well, that can't be bad. German economic sentiment. I suppose it could be worse, right? Right? But 77 and we only got 56. You're like, huh. So either the survey sucks or the economic sentiment in Germany sucks. So anyways, that's a big miss, huh? CPI in the United States of America, 1.7. Remember, the Fed uses PCE, but let's just pretend they're using CPI. As we know from the Fed meeting back in April, the Fed, actually it might have been, what, after April, right? The June meeting maybe? The Fed told us that they're cool allowing this to go to like 2.5, closer to 3 before they start jacking up interest rates. 1.7 is really bad. Now, it certainly can get worse. You can see other countries, and they'll tell you, oh, it could be worse. But yeah, that's pretty low. You know, that's pretty low. We want to see that at 2 and above for sure. 1.7, yeah, that's pretty bad. That's pretty bad. Okay. Now, part of that, like the typical thing that happens is when you don't get the number on CPI that you wanted, you say, oh, well, it must be oil, right? Typically that means oil is pushing inflation higher. And you can say, well, it's not really 3.2% inflation. It's just that oil is through the roof. Well, in this case, look at the headline is 1.4 and X energy is actually higher. Isn't that funny? You won't see that very often in your trading career, where oil is holding inflation down. Now, I laughed at the ECB, if not yesterday, every day. One of the things we talk about is no matter what they do, no matter how many euros they print, the euro tends to not get as weak as they need it. They can't create the inflation. And sometimes it's the cause is the Fed. The Fed weakens the dollar, and then all of a sudden the euro gets strong by because it's a de facto result. So So that kills their inflation because a higher euro means you need less euro to buy stuff, which means prices have fallen relative to euro, and therefore that's deflationary. And now, now the ECB could blame oil prices because then what you see is they're still kind of getting inflation because prices are going down because oil's going down. Another way of looking at it is they really need oil to go up. How about that? Well, by the way, Cash, I responded to your comment on yesterday's video. Yeah. Trying to buy JGBs. Well, and you would see some of that data in here, Cash. Okay. Okay. Yeah, cool. But you have to understand, like, this would be risk off. And then China's response to risk off would be buy JGBs. JGBs then go up and the yen goes up and then it goes down. So you were saying, it doesn't always mean just risk off. You're right. I mean, nothing always means anything. But there is especially when you compare yen strength to like dollar strength, right? If they're both strong, there's typically, they're so important, these currencies. If they're both strong, especially out of the blue strong, you're wondering what it is. It's going to be stuff like Chinese export data was horrible. Okay. Okay. And that's going to be risk off and there'll be consequences of that. Cool. Alejandro, what's going on, buddy? So anyways, Cash, thank you for the comment. And if I wasn't clear there, Cash had left a comment on yesterday's video saying, I'd mentioned Japanese yen strength and risk off. And his comment was, Japanese yen strength doesn't always mean risk off. And I agree with that. But there's a high correlation with that, just for the mechanical system of how the global money works. And if you take it one level further, if the US dollar is strong and the Japanese yen strong, again, it wouldn't always be risk off, but highly, highly likely it is. So that's all. But it's a good point. I try not to say things like always and right. I try not to. So maybe I slipped. All right. What's up, Roger? Okay, coming up, PPI. Okay. Once again, PPI, not that important, but what we're looking for is sort of the front run, if you will, in the sense that PPI will go up before CPI. And the deep technical economic word for this is sticky. It's true. Prices are sticky. So PPI will go up, and instead of raising prices, because producers of products need to stay competitive, so instead of raising prices, they just eat the higher cost and have lower profit levels. But you get to the point where you have to raise prices, and then CPI pops. Coolio. High fly, slippity slide, trading Forex is do or die. Come along on this. All right. So PPI, yeah, cool. Lots of speeches. Speech. Wouldn't that be cool if today you gathered all these speeches just to show off? BOE, Fed, Bank of Canada, Fed, RBA. You're like, look what I did today, just to show off. Hey, bring it on. Just to show off, you have to do it. All right, and then Aussie jobs tonight. Aussie jobs, very nice, very nice, very nice. It's Wednesday, so you should also know there's oil inventories, even though it's not on the calendar here. Oil inventories is today. So watch your CAD, watch your NOKI, watch your peso. Okay. And inflation out of China. So that's not likely to be great, but we can try to figure that out. Okay, exports are down, but imports are up. How's that going to affect inflation? Isn't it strange? Okay. Imports are up, exports are down. That's why it's all gobbledygook. Okay, boom. Thursday, continuing claims, great. More speeches, great. So, nice and quiet. Going into the Friday, retail sales. Cool, right? Now, do you think Amazon Prime Day is going to be recorded in there? No, but anyways. It's amazing, like Amazon.com doesn't do an amazing job of their Prime Day. Have you guys bought anything on Prime Day? You guys get any amazing deals? Deals that are just hard to believe? Yeah, but that's the thing though, isn't it, Jay? Yeah, which is way better, Johnny. Way better. But you'd think Amazon has this huge advantage with COVID. People are just going to buy from them anyways, and there's not going to be any Black Fridays or Black Mondays or whatever they're called, where you run out to the store and you buy all your Christmas stuff, right? So now you don't want to go to the store, so you should start buying everything on Amazon. But I didn't see anything that amazing. It's usually like they trick you. They're like, look, here's this Bose headset. It's regularly $399, but you can buy it for $149. But you're like, wait, these are the headsets from 2 years ago. They were $299 2 years ago. I can buy them for $179 like right now at almost anywhere, and you're selling them for $149. So you're like, okay, but I mean, it's not that great of a deal, right? And it's a little misleading. Who's Amazon.com's biggest competitor? And by the way, hint, hint, nudge, nudge, they may not be in the United States. Alibaba. Now, Alibaba has a big day, right? They have their big day, right? It's probably the only reason Amazon has Prime Day. What do they call their big day? Singles Day. The thing is, they push it, but they roll out like Taylor Swift concerts and stuff, right? Part of their shopping day. And you're like, oh my God, how many people would like just to see a free Taylor Swift concert? Don't answer that. But, it draws a crowd for sure, right? And that's the kind of thing that Alibaba does to like just go ape crazy. And then at Amazon Prime, you're like, huh, right? So yeah, I'm underwhelmed anyways. So just a thought on that. Sophie. Heartless Sophie. It's a cruel, cruel world. Yeah. All right. So, anyways, some yen strength. Dollar was strong. Now it's cooling off. Very cool. Some Kiwi strength, which is super weird, isn't it? There's more chatter. What did the RBNZ just say the other day? Like they are actively working on negative interest rates. Okay? Did you guys catch that? The RBNZ is actively working on negative interest rates right now. Boom, Kiwi strong. Weird. Nice recovery on the pound. Aussie's just kind of doing its thing in Euro El Suxo. And here's what I've been saying all these years. When the dollar decides to be the strong, Euro gets weak. It's just that. And then when the dollar decides to get weak, Euro gets strong. And very often it has everything to do with the Fed and very little, if nothing, to do with the ECB. It's not fair, but, right? It's not fair, it just is. Most of the smart money's out waiting. Yeah, maybe, maybe. But you know that's easy to say, right? It's easy to say like, oh, I don't want to trade this. Well, our job is to always analyze and be prepared. Okay. It's easy to be like the soldier on the, on the base that never gets attacked. Nah, no one's going to attack tonight. And then boom, someone attacks tonight. You're like, right? It's sort of like, buy the rumor, sell the news in regards to Kiwi. Yeah, because I mean that might be right, Evelyn. Where it could just be like, well, they're working, but it ain't there, or whatever. I don't know. Just it gets oversold for a while, or it just hits support, right? So anyways, here's our biddy. Biddy's just going to do its thing. So this has taken us now 2 months. It's doing what we wanted to do, so that's cool. So now we just got to like let it come down, probably fart around here around 11, and then maybe head back on up. That's all. Gold, okay. This is our third leg here. Double bottom, higher high, higher low, higher high, higher low, higher high, higher low, higher high. Okay, it's just sort of doing its thing. Slow, sleepy Joe. Hey, you can't say that. That's a good comeback, Joe. That's a good comeback. Hey. So anyways, boom, boom, boom. So it's just slowly but surely kind of doing its thing. On says, so the ECB doesn't matter that much. Well, to say it differently is the ECB is a new central bank, and there are structural flaws in its design. It's sort of like building a brand new nuclear power plant that has a crack. You're like, it's brand new. Yeah, well, there's a crack in it. Okay. Freed wants Rand. Yeah, well, so looking at gold going up, you might think South Africa could have a strong currency in the moment, at least that wave versus the current. Sure. The other thing we're looking at is Brent. If Brent goes up, the value of the Noki will go up. And we were looking at this as plan A long and plan B. Although I cautioned you that we are in the middle of the range, and that makes it a giant meh. So you have to just make decisions. Do you try it here and that's that? It's a shot, right? You plan big, but you expect small. Because, here's the logical entry, here's the logical exit. So you could say, well, I just did that, so this is the logical entry, and the logical exit's quite a bit higher. The downside is we really lack a trend, right? You're floating around with no current. Yeah, I can do that for you, HH. Okay. So, yeah, you could. If all you do is trade Brent, you might take a shot if you're long-term long. You take a shot just because you can. You got the right price. It might be a mediocre time, but you got the right price. So you take a shot, and that's that. Okay. WTI is a little cleaner, I think, a little bit, not much. Okay. Remember, we drew this, how many weeks ago now? 3 weeks ago, to say the bottom of the down could be here, and we would measure using a different linear regression to measure the new slope, if a new slope arrives. And it seems like a new slope has arrived. Oil inventories are today. And if oil inventories are low, then WTI should probably go up. Now, I explained you yesterday why I thought inventories might be down this week and next week. Do you guys remember? Oh, because of the holiday? Thank you, Guy. My bad. But does anyone know why I would expect inventories to be lower than expected? I mentioned it yesterday. Right, decreased supply because of rigs being shut down because of Hurricane Delta? Yes. But we still gobbled up energy. So now refineries are going to have to catch up and restock their inventories, which means they're going to draw down what's in supply now. Because really, when it comes to oil, you're not tracking the supply and demand of people going to the gas pumps per se, but the supply and demand of oil to refineries. Because if they don't make gasoline, it doesn't matter if everyone's buying gasoline. If they don't make gasoline, maybe they're shut down, maybe they're retooling or cleaning or doing their maintenance. If they don't make gasoline, they don't demand crude, and therefore demand is down. So you could say, well, everyone's going to the pump and filling up their cars. Yeah, that might be true, but that's not really what we're tracking. We're tracking the supply and demand of raw crude oil, not gas, not plastic, but raw crude oil, and the demand from refineries that turn that raw crude into product. Okay. Going back to this nat gas, I think it was on Monday, someone asked me my opinion on it. And I said, well, we got a monthly target and a weekly target. So it's not an entry, it's an exit. I only see out. Remember that? It's been down now for 3 days. We're in this area where there could be a re-entry. So if you used to be a bull and you're thinking about maybe getting back in, today's Wednesday, tomorrow's Thursday, the next day is Friday. If you were a bull in this period, you would be looking to get back into the up. So maybe 2.5, and that's where we are now. So if I were me, I'd be eyes on the prize, looking for maybe something like this. How about a higher high, higher low, long and gone? Okay. Thank you, CJ. So you wait the slope to be positive and not negative. What do you think? Coincidence? M3 to M1. Hey, somebody should put that in a book. Too late. Oh, you got that, Maida? Nice. Good for you. Did you get out, though? Have you read papers by on Hamilton's? No. No, Alejandro. Very good, Maida. Very, very, very good. That's a wonderful trade. Good for you. Yeah. Yeah, great. I mean, again, one of the things to really pay attention to is where these weeks open up. Like what happens when they open up at M3? Boom. Not always, because we know you can, there's only two scenarios. How about that? There's only two scenarios. One, your OOP, right? Or two, reversal, really. So you'll notice moves that occur like this typically happen at exactly the price you would expect. Okay. So do you guys remember doing this as well? I have this drawn here, but you remember on the small time frame, I did it this way to help you analyze if there's a break or not. So maybe that was helpful. It's a while ago now. So there's the beast. Kitty cat waiting for oil. I think it was yesterday we talked about this, that this is your entry for a bull, and this is your entry for a bear, meaning if you traded the double bottom, higher high, higher low, higher high, higher low, higher high, higher a higher low. This is like in the other example I said, it's out of position. And anyone that's gone through the training course knows that in an OOP scenario, you would buy exactly this. And your target's here. Okay? The opposite and equal to that is for bears. And we know that's exactly where bears would sell. So we know that exactly where bulls would buy, and we know exactly where bears would sell. We just don't know the number or quantity of bulls and bears, but someone's going to win, right? This is a street fight in here. So what's most important is you already know if you're a bull or a bear, and you know the prices. Okay, so this is very clearly a massive risk to bulls now, because this holding predicts down here. Okay, doesn't mean we'll do it, but you should be prepared for that. Okay, it definitely has that in potential. Okay, bulls are hoping for that, but that's not a strategy. You know, if you were a bear, all bulls know this. If they were bears and they sold there, they're thinking here. Okay. I think we're about the same as yesterday on USD Rand, aren't we? Just riding a 4-hour 21. Okay. So it's not exactly the way we have it drawn, but I think in the back of my mind, the important thing is this is our selling price, and we're not wrong. I wouldn't call this a big win or anything, but we're not wrong. So I'd set it and forget it. Okay. That's all it is. This was our sell zone, and it didn't go higher. I don't know, right? Was that right, Alex? Yeah. Oh my God. So I'm ready for another get-together in New York. Or Boston, maybe. Maybe I need to go back to school. Oh, my God. I keep forgetting. Next week, I'm starting Harvard Business School. Oh, my God. I keep forgetting. I can't go on a vacation. But anyways, that would be cool. I'm sure Harvard in the fall is really pretty. I've been there a few times actually in the fall, but I haven't been there in the winter, I guess is what I'm thinking. I haven't walked across campus in the snow. Oh, wait, is that true too? That might not be true. I think there was a little bit of snow. I'm thinking like winter, like Canada winter, but maybe it doesn't do that anymore. See, Daniel, I see your question there. It depends on the market conditions. So there isn't a right answer to that. It was almost like the answer I gave you the other day in regards to a combination of seasonality and such, right? And market cycles. And so sometimes it lines up and the best trades are the ones you never touch. And then the other years it doesn't work out that way. So there isn't one way, but I can tell you, like, think of the math, right? Like the math doesn't lie, right, Daniel? You will not become very, very, very successful if you can't let your winners run. So we know that spot trading and scalping and day trading are profitable, meaning you're holding your trade somewhere between 15 minutes and 15 hours, let's say. You can be profitable, but you can never be very, very, very variable, very, very, very profitable. To get very, 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 very profitable, you either have to jack up your leverage, which is, of course, financial suicide. The other way to do it is have bigger winners, and that's where you need to, not trade waves, but trade currents and let those run. And so your best years are going to be the ones where you have like 100 trades open and, you got like 2,000 pip trends in place. And they may only last 6 months, but they're there. So for example, after the election of 2016, pound yen rallied for 5,000 pips. Well, what if you had 100 trades on that? You see what I mean? Peter, the simulator is part of the course. Yeah, so Daniel, the secret is how you adjust. Okay, there's like business cycles, there's seasonality, there's political cycles. It depends on where you are, right? It depends on where you are. So, yeah. And here's the peso following gold. How nice is that? I'll just remind you, this is bearish day trading. Okay? These pink zones are sell zones. So what you would be doing today, because I'm not going to show you this and say, see, look, you should have sold it. No, you can do whatever you want. If you are a bear, and I have this set up only for a bearish point of view, so you could conclude I am a bear on this, because I'm only looking at it from a bearish point of view. So what's the point of this chart? What's the point of this webinar? The point of this webinar is you need to learn how to prepare for tomorrow. And under current market conditions right this second, if you were planning tomorrow, you would want to sell it around 121.33. Now, if this keeps falling today, it's going to pull tomorrow's sell zone down. But you have choices now. You should be looking to sell little rallies. So you could do things like on a 5-minute chart today, the rest of today, you're selling moves like this. Well, Daniel says, yeah, you've learned that not everything has the right answer. Well, put it this way, like the value you add is determining what the right answer is now. So there isn't you can't go to a textbook and open it up and say, based on what's happening right this second, what is the right answer? It's not math in that sense, right? Right? You don't take a derivative of the function or something like that. It's not calculus. So the answer is look at all the variables that you've identified and then try to identify unknown variables like risks outside of everything that you know. And things that you should be analyzing in this scenario is, what is the political cycle? Where in the business cycle? Where in the monetary policy? What about the fiscal policy? What about economic conditions, not just locally but globally? And then where are we in the timing of all these things coming together? And how should you manage your risk? Like, there isn't an answer. It's your process to creating the answer, which is your value. That's what your value is. If you didn't have to go through that process, you just have some EA to make the decision, and professional Forex traders would make $5 a month because you just do an EA. The EA does everything. You don't have to pay an EA, right? There would be no money in professional money management if the EA could just say, oh, in this case, here's the right answer. You could just program it, right? So, of course, there isn't an EA to do that. So you will have the value, the right answer is whatever you think, right? Yeah, it's your alpha. What do you determine to be the right answer? And then your ability to carry that out, right? Look at some of these. Not a lot has changed since yesterday. A lot of volatility on the pig here. I'll leave it. Hang on. Yeah, not a lot. I can move some stops a little closer, I suppose. So, yeah, nothing really amazing to report here. You can see that we're holding on trend, we're holding on daily, we're holding on weeklies, we're holding on monthlies. Not perfect, it's not perfect, but then again, nothing has changed. So nothing is good, but yet nothing is bad. Okay. Be nice to see, but here's the funny thing, is how strong this Kiwi is. It's odd, right? I think it's odd. And It's weird. I would expect this to go down. So you're like, well, Wayne, why did you buy it? Well, I was supposed to. Technical analysis. Technical analysis said take the shot. So I took the shot. I'm like, I don't really get it, but okay, boom. Oh, all right. So it's really strange. So if we can get a breakout here, even better. Okay. And of course, what you should be in the next 6 to 12 hours, you should be looking to buy one of these if you're a bull. So you're going to get a breakout and a pullback and a new long right around here. So hopefully this goes to from 66.70 to maybe 67, then back down to maybe 66.50, and then off we go to the upside again. Okay. So there you go. It's weird. You could look at it like maybe from this point of view. Okay. So maybe it looks less weird. So we were here, then we were here, and I said, well, if we come down to here, you should buy it. Hang on, let's double check that. No, that's how it went. We were here, then we made a higher high. So I said, all right, I want to buy it down there. My stop goes wherever. It was lower than that. Then we come back up, and I tried to throw in a combination of weekly and daily, it looks like. The interesting thing is that the weekly worked even better. So you have the first week, this is a buy. Second week, this is a buy. Third week, this is a buy. And we're hoping up and down and next week, okay? So you'll see, like, I just planned this on the daily, and I said, well, it could go up to here and go here in the next 16 hours, right? So if you buy this later today or tomorrow morning, if you get the opportunity, guess what? That's next week's trade. Okay, you see that? If you get a day trade today, it might be next week's entry. And you're in next week's swing, if not on a Wednesday night, on a Thursday morning, and that makes sense. Okay. So maybe you get something like, Okay. So these are weekly entries in bullish mode. Okay. So if you're a bull, this is your buy zone. If you're a bull, this is your buy zone. If you're a bull, this is your buy zone. Notice that this low didn't make a lower low. And because we haven't made a higher high, the buy zone hasn't really changed. So what we need is to be up here by Friday, which would pull this up. And if it pulls that up, then we're going to have a future buy zone more like this. Which if you're studying price action, you say, well, that makes a ton of sense, because then it'll be down here, which is simply a role reversal. Thinking, Daniel. So I got to let this make a higher high, or it's failed on me. That's all. Okay. Another way of looking at it is the target for October. Let me throw down the conservative target. We're supposed to be on our way to 136. So I'm in this trade, and I don't really want to exit the trade until I have 500 pips, let's say. Take care, Joe Moo. Yeah, it's Oscar Mike. Well, he kicked off a counter, right? So you had an M3 to an M1. Okay. Anyways. So we'll see. If you analyze this carefully, it's worth 600 pips minimum. Minimum. So going back to Ansel Daniel's question, you know, how do you become filthy, stinking rich? What's the best strategy? Squeezing the maximum amount of pips out of your trades because you analyze the markets correctly. Some people might be happy with 60 pips. I want 600. Same trade. All right, so I think that is pretty much it. Oh, no, someone asked for XRP, right? Here it is. Okay. So a little bit has changed, not a lot. You can see there's this to this to this. That's a higher high, or sorry, a higher low. Pretty simple. That's why we have it sloped positively. A buyer would expect a higher high, which we got. So therefore, you'd expect a higher low. In particular, if you use price action on a roll reversal, what used to be resistance is now support. So now we got that. So then inside of that, now you would expect price action to be bullish. Higher high, higher low, 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 higher high. I mean, dude, right? So you drop into a smaller time frame now, and you will notice that on that area, I've already told you this. You should expect at this price a higher high, higher low. Well, this one seems to have done it. So once again, and I already have this drawn for you, you can already see it. There, so when we were up here at the higher high, I drew this at resistance for a roll reversal to say, if you're a bull, this would be your new buy. Okay? And so, yeah, to me, nothing's changed. I analyzed this a month ago, 2 weeks ago. It's all the same, so it's not terribly complicated. Okay. So cool. Very nice. So I think now we've covered everything. Gold and oil, Bitcoin, XRP, dollar pairs, yen pairs, exotic pairs. Yeah, I think that's it, right? CJ, it's the easiest thing. CJ says if you're a bull or a bear, ... That seems to be my biggest challenge. It's the easiest thing ever. Okay? Take a coin and flip it. Because remember, it's not, and maybe you're confused on this, it's not that you're a bull or a bear on a particular currency. You're a bull or a bear on global macroeconomics. Okay? So are we clear on that point, CJ? I'm not telling you to make a decision to be a bull or a bear on every single currency and try to map that through. So let's make that clear. You're either a bull on global macroeconomics or you're a bear on global macroeconomics. And often these things change every 5 to 10 years. So it doesn't happen that often. Okay? And with that, you should be able to, based on import-export data, know where the flow of money goes when things are good. And then, of course, when things are bad, the flow reverses. So all you have to do, CJ, is flip a coin and you will be profitable. Okay? And I know this to be true because we're only talking about fundamental analysis right now. So if you fundamentally decided to be a bear on global macroeconomics and your fundamental analysis is based on a coin flip, it doesn't matter. It really doesn't matter. But you need to be consistent. So if you're a bear on global macroeconomics, you know exactly what you want to buy and exactly what you want to sell. Not complicated. From there, you use technical analysis to confirm or deny whether this is a good time to buy or sell. Anything. You can tell whether it's a good time to buy or sell anything at any time. That's what technical analysis is. Technical analysis doesn't predict the future, but it'll tell you market conditions now. Okay? So if you think the Japanese yen is going to be strong because you're global macro risk off, now you ask yourself, okay, is this a good time to buy Japanese yen? So you open up your yen pair, for example. Let's do it this way. Okay? And you're like, okay, you want to buy Japanese yen. Is this a good time? And that's it. There's your decision. And if it is the right time, what's the right price? That's it. So for example, if you were a bear on this because you want to buy Japanese yen, how about 76? Would you sell that? The next thing is you're like, well, not until it's made a lower low. Okay, well, let's throw that down. Let's throw that down. Okay. So how about this then? Price makes a lower low. Would you sell 75.50? You see? You just do this all day, every day. You know exactly what you want to do on the Aussie yen. You want to sell it. So you don't have to waste time figuring things out. You already know. You made a decision based on global macroeconomics. If your decision was flipping a coin, you can say, well, Wayne, that's random. Well, it is random, but the market's random. What you need to do is be consistent. So if this is not a good opportunity to sell, you know that because that's what technical analysis is. So it's either a good time to sell or it's not a good time to sell. Look, did you sell it up there? Could have, should have, would have. That's price action. How about this with pivot points? Sure, for sure. And here's another one up here at 77. Cool. So you know somewhere between 76 and 77 you want to sell this. Done. Not terribly complicated. You can't buy it. You can only sell it. So at what price would you sell it? Well, pivot point theory says this is a good one, and that's a good one. Since we were low, this would be your plan A. Now, if you were using price action, you would say a little higher, it's 76.34. So now you know somewhere between 76 and 76.34, so let's say 00, to 76.34, in that 34 pip range, you want to get short. So now you know the price. You know what you want to do. You know your strategy. You want to sell this because you're global macro risk off. You decided that weeks ago, maybe months ago, maybe years ago. So now, if you do your technical analysis right, you only sell in bearish markets. So now think of it this way. Okay, CJ? You flipped a coin. It tells you you can only buy Japanese yen, which means you can only sell yen pairs. Cool. Now, if you only sold yen pairs in bearish markets, are you likely to be profitable? Or are you likely to be unprofitable? Yeah. That's the secret sauce. And if you're not right, you're going to have less opportunities to trade. But you will have opportunities to trade, and when you do, you will likely make money. But if you're wrong and the market is bullish, and again, it's not complicated. Technical analysis just shows you. You can look at a chart in less than 1 second say, this is no good. Okay? So if the market is bullish and you're a bear, there's nothing to do. So what's the big deal? Okay? Now the better thing is being able to do some sort of fundamental analysis so that market conditions are favorable to your trading more often than not. You're not trading waves, you're trading currents, right? So all your global macroeconomics is just telling you where's the current going. But if I say I'm a bull, okay, and you say you're a bear, we will both make money. I want you to really understand it. There is a symbiotic relationship between bulls and bears in the foreign exchange market. Bulls need bears, bears need bulls. Bulls buy low, bears sell high. Bears need bulls to buy it so they can sell it. Bears sell green candles. Bankrupt, broke, out of work Forex traders sell red candles. Okay? So, bears need green candles. Bulls need red candles. They need each other. Okay? So as long as you're consistently only buying in bullish opportunities or only selling in bearish opportunities, you should do fine. And on the long run, it'll come down to whether you're correct on your bias. If you're correct on your bias, you'll have more opportunities to trade. And of course, your opportunities to trade are likely to produce profit. Okay? So for example, bulls would have bought this without any hesitation, and they would have exited here. Bears would have sold this without hesitation and would have exited here. So you could say, well, that's interesting because to the left is probably a bearish exit. So bulls bought it. Bulls took it up to an exit. So now the bears are sitting here going, oh, all the bulls just exited, so we'll sell it down here. And then all the bears exit, and then the bulls say, oh, well, all the bears exited, so we'll buy it here. See, nobody knows the outcome, but they only know where to trade. So right now, we are actually in giant mediocrity. See, bulls buy here, bears sell here. Well, there's no entry. Look at this. This is exactly the price. Exactly the price a bear would sell. Okay? And on that day, which is the 1st of September, we knew by the end of September, the likely exit is going to be somewhere around 74. Holy schnickerschnacker. Okay? So if you buy in the sell in the middle, you're a liquidity event. Okay? So if you do your technical analysis right and you have your bias set, your trading will improve. That's it. If you have your bias set and you're half decent in technical analysis, you'll be fine. Okay? You'll get your turn if you're patient to wait and disciplined enough to execute your trades properly. Okay? Okay? So you're bullish, so you want to buy Japanese yen pairs. You want to sell the US dollar, that kind of stuff. Cool. Cool. Now you got to wait. Cool. All right, guys, thank you for being clients of Traders Way. Thank you for being part of the Forex.Today YouTube community. Excuse me. If you need to learn how to trade, video training courses, there's a link to the video training courses in the description below. If you learn by reading books, there's a link in the description below to my book, Strategic and Tactical Forex Trading. If you need a broker such as Trader's Way, a link is in the description below. If you like my chart templates and you'd like to buy a copy for $5, the link is in the description below. There's a lot of resources in the description below. Find what you need, click a link. Sometimes you might have to pay some money. I'm sorry, that's how the world works. You got no money, you got no car, you got no woman, and there you are. So kick down, come clean, don't be a holdout machine. Pay the $5 and get the chart templates, bro. All right, that's it. So I will see you tomorrow. So once again, peace on earth, may the pips be with you, may our profits be above average. I will see you tomorrow. Also, tomorrow is a Thursday, which means my live trading group, my swing trading group, will be getting together at 4 p.m. If you want to join that group where we plan things out for next week, we get together on Thursday to plan on what we're going to do Monday and Tuesday. You got to it's mind-boggling. Okay? If you want to join that group, what you do is go to fxbootcamp.com, pay for the video training courses, because we don't have time to sit around and hold your hand all day. You're going to have to watch the videos. It's going to take you 30 or 40 hours on your first round. You'll probably watch it 2 or 3 times. Then the second thing will happen is you'll be invited to join the group. So some people in the group are very brand new, but they're going through the videos and they're coming to the live meetings to get to hang out with more experienced traders and to learn from them as well as from me. New York time zone, CJ. Okay? You can learn from me, but you can learn from the others. Some people have been working with me close to 15 years. So they know me well and they know the stuff well. Right? Jim, I think it's 15 years, isn't it, Jim? Is Jim still here? Probably is. Someone came to my non-farm payrolls. Yeah, 15 plus years. Someone came to my non-farm payrolls presentation at FX Street, and he and his brother were also back from those years. So, very cool. So like I said, you can learn from me, but you can learn from others. And there's a very valuable lesson in that. Our group work is some of the best learning experiences, I think, from there. So like you can see what I say, but then you can see what others see, and then you see what I see of others. So imagine get together and you in a group, I give you a task and you as a group go through and find good trades and you agree, no, this one is better than that. Why Aussie dollar when you could do Aussie Swiss franc or Aussie yen and all that kind of stuff. And as a group, you're doing and sharing your ideas and technical analysis, and they come together as a consensus and you finally choose your Aussie yen and you come together as a group. What is the trade plan? What's the expectation? Where's the entry? Where's the stop? All that kind of stuff. How many pips are going to be in it? How much are we risking? And then you bring it to me and you present it to me in front of the entire group now. And then I start asking questions and pulling it apart. And you'll say, oh, well, no one else in the group asked what Wayne asked. And that's interesting. That's when you start learning, because you're not writing down rules. Wayne said, if this happens, then that happens. And Wayne says this and that. No, you actually come together as this group. And as we're planning the future, you're also learning how to ask questions and think and learn. You learn how to think for yourself, which is way, way cool. Way, way cool. So maybe I'll see you over there. Well, it's good to have you when you can make it there, Daniel. So anyways, peace on earth. May the pips be with you. May your profits be above average. Cheers.